Hello, everybody. Welcome to a new week. And we are back again. We have a new week on our hands. And I have this dollar index in front of me to explain my position, what I see on the chart. And to begin with, I'm seeing that the whole of last week, the entire week was an inside bar, was an inside trading week, meaning there was no major liquidity taken. Both the downside and the upside of the market was not taken. After these 2 weeks run, the market decided to rest after taking out this high, which is very obvious, which is very obvious of the market, something that we usually see after an overstretched period of time. So let me go to the days to see what we have. So this is Thursday. This is Wednesday. Now, well, remember that I was using this low, this high as the trading range. Wednesday came to it. We rallied. Thursday, I was expecting a continuation to the previous week's high. That didn't happen. But I also didn't expect price to close all the way. But hey, this is price action. This is what it's telling us. Closed way below this, all of this period, and then expected Friday to continue lower. But also Friday turned out to be an inside trading day. So that's what it is. So this week, let me mark out this high, this low. Right, these are the key liquidity areas I'm looking at. Right, so we have this swing failure here, right? And if this area decides to be used as a support, then I'm sorry, we'll see this level as well as this level and possibly this low, right? So this is the low that started this run, and this is the initial low that started this run, failed, it's been taken. So this is the low that's supposed to perhaps move price to the higher price to take out the higher um liquidity upside, right? So if it fails, this should go and that should go, right? But I would see how the H4 is behaving according to price action. Let's see. So let me mark this one out. Change that to OB, because price is actually aggressively closing below the opening as well as the low. So this is something we cannot overlook, right? The way price closed way below the low and then the open, sorry. This is something that we cannot overlook. Let me see how it is doing on the H4. So on the H4, this is the swing failure I'm talking about. We have this H4 opening fair value gap that has reacted to price. Also, after price failed to go, we closed below this series of up close candles. That is what we have as the OB, and we've seen an H4 swing high forming. Had an H4 swing high here, making this one near-term target. Change this one to liquidity level. So if price continues to play like this would be the first target for the week. Subsequently, if we close below this low, then we aim for this other liquidity level as well. But in all, we would expect price to close below this level, right? So something like this, and then we can target all of those. All right, this is the H4. Let's go down to the H1 to see what we have. So on the H1, we have price taking out this short-term high as an internal ring liquidity. And then we have this. So on the H1, what we can be using to track price is this fair value gap here that was like held price here. And so if you close below it, that can be the first signal to look for breakdown or continuation to the downside, right? So what I mean is you want to see a breakdown, price should close below this fair value gap and then also below the up close candles on the H4, and then we can short that. Something like this for this week. And then I've also mentioned that if we get a close below this, then we can subsequently expect price to be extended to that low. Right. So that'll be it for the dollar. Charging from the swing low and the closes below the up close candles means that all of the bullish PDRs has been disrespected, and so we are now attempting to attack lower prices. I'll switch to the euro, the daily, and I'll clean all of this up. So euro on the daily, we have almost the same thing, swing failure here, price closing strongly above this, with this being our target. On the H4, we have that rejecting price. And so this is a swing point, the swing low that has been formed here, which is a very good sign. Take this one off. Right, so on the H1, we have fair value gap here that can be used. You can see price has actually closed above it over here on EU. It's closed above it here. Then somewhat didn't quite get, I think we closed above that here slightly. So we want to see price being held and not come below this low so that we can aim for this high. And then if there's more momentum, that's high, which we have outlined on the higher time frame. So this should be held, this one from the H4 rejected price. The fair value gap on the H1 has been disrespected. Here, this down closing candles have been closed above. So markets should open and then we'll see exactly what's going to happen. But whatever the case is, we don't want to see price coming back to close below this low. That would force us to relook at price and maybe change what we are looking for. All right. Let me see what we have on the M15. For Euro M15, my internet is beginning to misbehave. Internet beginning to misbehave. Come on, come on, come on. Okay, this is what we have for the M15. There's really not much. This is liquidity taken here. So liquidity taken here. We should close above this level for higher prices. It's simple as that. So there's not really much. We are still in a consolidation after this swing point. So let's see for GBPUSD. GBPUSD. Internet messing up. Internet messing up. This is what we have for GBPUSD. Almost the same thing. We are using this as support. That's going to be the OB. Let's see what we have on the H4. Swing failure, closed above that, closed above that, comes back to this H4 fair value gap, which is also harbored in the daily OB. Let's see what H1 has. So, right, so for the H1, there's not really much here. But from here, we want to see all of the bearish PDRs being disrespected so that we can then use those as support levels for higher. We want to see bearish PDRs being disrespected and bullish ones being formed. So what I mean is that this here should give way and also close above this. So what I mean by bearish PDR is giving way is that I want to see a close above this. This one should be used as support. This fair value gap should also give way, used as support so we can track higher, right? So from here, we want to see all of the, this is H1, all of the bullish or the bearish PDRs. Ideally, we should see this one rejecting price for continuation lower. So if we see price closing above it, it's telling us that price has the tendency of using that same PDR as support for higher prices, right? So not to make the video too long, I would end here for what is to come. We'll definitely come back after market close each day to see how price is reacting to our levels and to see any adjustments that can be made if possible. Thank you so much for your time. If this video was any helpful, consider liking and subscribing, share if you have to, comment if you have to, and I will see you. Bye-bye.